Let's dive deeper into the action with the markets reporters. Abigail, what are you watching?
Caroline, let's shake it up a little bit today and take a look at the Dow instead of the S&P 500, because the Dow today breached its 200-day moving average. We've been looking at that S&P 500 below its 50-day moving average, suggesting it's going to go to the 200-day moving average. A lot of people discount the Dow because it's such a narrow index, but as one major average goes, typically the other ones will follow. So this is a one-year chart ahead of the volatility in the fourth quarter. The Dow had been above its 200-day moving average through a bout of volatility and then clearly slicing through it back in December, climbing back above it in February, basically staying above the 200-day moving average with a brief exception of late May and June. Today, last week, slightly below that 200-day moving average. Even more worrisome than that fact, Jessica, is the fact that today the Dow put in a lower low, which confirms the Dow to make a drop back toward last December's lows. Whether or not that happens and whether or not it happens right away, who knows? But this is a perhaps pretty bearish chart if the sellers really step up and the volatility that we've seen continues, Jessica.
Thanks, Abigail. Well, I am keeping a close eye on crude oil here, down for a second straight session. It's really for two reasons. Firstly, of course, the U.S.-China trade war threatening to hurt that oil demand. And second, growing U.S. crude stockpiles at a time when we should really be seeing stronger demand at the end of the summer driving season. If we take a look at these charts here, we can see WTI right around $55 a barrel at the lowest level in a week, just really flirting with that 50-day moving average, not quite able to hold above it. And sentiment in the market is quite bearish, according to the traders I have spoken with.